Welcome to Quantum Finance. My name is Parker. I'm the head trader here, but I am not a financial advisor and this is not financial advice. So in today's video, we'll take a look at the economic data, we'll go over some news, and we'll do our market recap and market analysis. So I didn't make a video yesterday because I was out of town, but I do want to go over CPI, the inflation data that we got yesterday. So we did get CPI year over year come in at 4.9% with 5% expected. So today, Thursday, May 11th, we did get initial jobless claims at 264,000 with 245,000 expected, and we did get PPI month over month come in at 0.2% with 0.3% expected. So now we can look at some news. So this is the budget deficit widening to $1.9 trillion. And this is occurring, when the economy is still in expansion with the unemployment rate at a 54-year low of 3.4%. And so here we have the interest expense on U.S. public debt rising to $828 billion over the past year, which is a record high. And if it continues to increase at this current pace, it will soon be the largest line item on the federal budget, surpassing Social Security. And here we have roughly 2/3 of mortgages have an interest rate below 4%, which is the number one factor driving the limited housing supply, as many of these homeowners literally can't afford to move. And this is the repeat bankruptcy filings. As you can see, they're piling up at the fastest rate since 2009. And this data covers companies with 10 million plus in liabilities. And we also have Jamie Dimon, the CEO of JP Morgan, saying that short selling should be banned and believes that those who do it should face legal prosecution. And here we have the PPI, the Producer Price Index, increasing 2.3% over the last year, which is the 10th consecutive decline in the year-over-year rate of change and the lowest print since January of 2021. And PPI did peak at 11.7% of March of 2020. And these are the CPI increases over the last 2 years. Here at the bottom with the least amount of increases, we do have medical care, apparel, and wages. And at the height up here at the most increases, we have fuel, oil, gasoline, and home prices. And this is the interest expense on the U.S. debt getting up here to the same levels as defense spending. And 30% of the debt has to be refinanced in the next 12 months at today's higher rates. And we have UAE's top officials shorting billions of dollars in U.S. stocks, fearing a recession. And we have the misery index, which is combines unemployment rate and headline CPI, falling to its lowest levels since February of 2021. So now we can do our market recap. Let me pull this over here. Starting in the debt market, we have the U.S. 10-year yield getting a red day today, pulling down into this lower extreme. Still pretty squeezed here, just going sideways, just chopping sideways here in this range. We can look at the dollar, big green day here in the dollar, getting up through that midline, working its way up here towards this upper extreme here on the daily chart. If you remember a couple videos ago, I did say it kind of looked like we were getting a bottoming structure forming here. As you can see, we are squeezed here. So I would definitely watch this to see if we do get, a squeeze to the upside, maybe make a move up here towards this midline on the weekly chart, up here about this 103.2 level. Now we can look at the stock market. Sorry, my charts aren't really cooperating right now. So we do have a green day here in the stock market, coming down and wicking, basically off that midline here. Pretty low volatility. Now we can look at crypto. Oh my. Sorry, I did not prep my charts enough for this. So Bitcoin, we do have a red day here in Bitcoin breaking down through yesterday's lows. Kind of looks like it wants to squeeze to the downside here down through this lower extreme. I would, kind of watch this level here to see if we do break down through this. If we do break down through that, I would expect it to pull into this, weekly midline, which does line up with these previous highs back here from February. And if you do look at this pattern, it is kind of a head and shoulders pattern. With this kind of being your neckline here, which it kind of does look like we are breaking out of here with your left shoulder, head, and right shoulder, which is a bearish reversal pattern. So now we can look at XRP. Red day here in XRP. Kind of still holding these lows from the past couple of days. Still kind of pushing down here on the weekly chart into these, kind of significant level down here at about this 41 cent level. As you can see, it was a significant high back here in July. here in November, here in January, and that's that same level we are pulling into right now. So hopefully we can get this level to hold and maybe get some type of wick back above this midline here. Turning to commodities, we'll look here at oil first. So red day here in oil, didn't quite make it up to that midline, but it's just pulling back here, sitting down here in the lower end of this daily range. Gold, red day here in gold, after, getting wick rejection off the upper extreme yesterday and just pulling down here into the midline on the daily chart. Looking at silver, we do have a big red day here in silver, squeezing to the downside, breaking down through that midline and down through this lower extreme here, pulling back into this previous structured resistance here from January. So now we can do our market analysis here. We'll start with our volume analysis on the daily chart of the S&P 500. As you can see, fairly low volume day today, below that volume average line. Besides yesterday, which we did get that volume spike here because of CPI data, the past couple of days have been like pretty low volatility. As you can see, these candles are pretty small compared to, as you can see, the past couple of weeks where we just had insane volatility, whipsawing to the downside, or this lower extreme, upper extreme, lower extreme. So as you can see here now, we are just kind of chopping around in the middle of the daily range. We can look at the 3-minute here. So this was yesterday with the CPI. As you can see, large volatility compared to these other days I was talking about, like today, Tuesday, and Monday. As you can see, pretty low volatility, just sideways action. And then yesterday with the CPI, just really elevated volatility and higher volume. But as you can see today, we did get a gap down here, kind of pulling down at the open, recovering, going back down to the lows, pushing back up towards the open, and, really just closing here right above the open. So just an overall sideways, kind of consolidation, choppy day today. You can zoom out a little bit here. Looking at the 15-minute, as you can see here, we do have a pennant shape forming, and we are pretty squeezed here on the 15-minute. So I would maybe expect some type of gap tomorrow, either to the upside or the downside here. As you can see, this upper trend line I have drawn here. I would watch to see if we do break this. We can look at the VIX and the NASDAQ. As you can see, the VIX getting a pretty big gap up here, and then, just kind of fading down, filling the gap, and then pulling into the significant support level at around the 16.7 level. As you can see, the NASDAQ here just kind of uptrending, breaking through yesterday's highs. Not really extending too much, but it did break through yesterday's highs. As you can see on the 52-hour chart of the NASDAQ, it is a lot relatively stronger than the SPY. We could just pull up the SPY here so you can see. So as you can see, the NASDAQ kind of breaking out of this range and, getting a stronger uptrend here, where the SPY is still, kind of down in this range. I do want to point out this trend line here on the momentum, with the SPY being below the zero line and the Qs being above it. So a lot more strength in the technology sector as of late. So we can go back to the 3-minute. So when it comes to trades, this was pretty bad action. Really, when it comes to the SPY, really the only kind of decent setup was here around 2 o'clock, a little after 2 o'clock was when the price did get back above VWAP here and was holding. It was really the only kind of good setup we had, because we did have a MACD cross to the upside here, bouncing off of that zero line, and we did have slight upward momentum here on the 2-hour. So yeah, when I'm looking for trades, I like to see bullish MACD and bullish momentum. I like the momentum and the MACD to line up in the same direction, and that was really the only time. And I also like it to line up with the VWAP. So this was really the only decent trade here for call options, just as a play to come up and retest the open. But yeah, pretty low volatility day today. A lot like Monday and Tuesday. But yeah, that should do it for the video. Appreciate y'all watching, and I will talk to y'all later.